wanted to take a minute to specifically discuss my decision-making process in the TCAP ETH BTC fund on Enzyme.finance. So this is going to sound like a giant shill for this portfolio, but it really isn't. It's just people were asking me, what does my decision-making process look like? Why did I jump out of everything a couple days ago? So a few things about Enzyme and non-portfolio custodial management stuff. They are less nimble than, say, centralized exchanges in that, I can get orders filled in and out very quickly on centralized exchanges. With decentralized exchanges, there's a little lag time. I mean, at the end of the day, that's not a big deal, but it means I can't be super nimble, as nimble as I want to be maybe, as far as my trading decisions. I need to take it super slow, especially with AUM of any size, where it's going to affect the book in some way. At some point in time, there's slippage, there's all sorts of stuff going on here behind the scenes that needs to be taken into consideration. So it's best to have a system for this, right, to set up. So I do have a spreadsheet that I use. None of this is going to come as a surprise because I've talked about all this stuff before in various videos, but this is more of an illustration of specifically what I'm doing and what other people could do if they want to set up their own system or model for how they should be trading, making long-term decisions, not necessarily short time frame, 4-hour or less decisions. Because inevitably I'm going to get comments, does this work on X time frame that's way lower than what I'm looking at? Of course it does, but that's my focus for this specific trading style isn't basically anything below the daily. I don't really care about anything else below the daily. I'm looking specifically at the daily. So what I did was I looked for metrics that had successful backtesting, and I'll show what the charts show as well in a few seconds here, but I'm looking at a few things specifically. I'm looking at a set of technicals that I trust and have positive backtesting, high hit rates. Then I'm looking at on-chain data because that does influence these trading decisions. It influences the market. If active addresses are screaming, then we're likely bullish. It can be a leading indicator. It can have a divergence. I'll talk about ETH at the end, but these are all the things I'm taking into consideration. So you can set up your system, you have a model of what you like, and then you can assign values for positive, negative, whatever you want this to be. If it's a percentage, ideally this adds up to 100, this adds up to 80 on a good day, and then the extra 20% is up to my, subjectivity, discretion, other stuff that I don't necessarily look at and apply a value to, but have a handle on. I'm also obviously looking at chart patterns. I'm looking at some of the macro stuff I'll talk about as well, as far as what's going on. And the hodl wave stuff, also important. I talk about that all the time. That's going to strongly influence what I do and when on funds like this or portfolios like this. Let's go through some of the charts. Why did I get out of everything a couple of days ago? What did I see? Let's run down all this stuff. This is what I do on a weekly basis. This is what I'm looking at. None of this is new, but I think it's important to put it all out there. So the 20-week SMA historically has had insane backtesting for hit rate of support resistance, expectation of trend. Is it bullish? Is it bearish? I mean, all these technicals at the end of the day are measuring trend strength or weakness because BTC or crypto in general loves to trend. And historically, it's been pretty easy to measure that. So just looking at this, you can see, okay, we're above the 20, it's bullish, we're below, we're bearish. Something else I'm looking at mentally is how far away we are from the 20, either above or below. That's a strong indicator of overbought, oversold. So going into this run up, we're getting more and more overbought above the 20. Yes, the trend is still strongly bullish, but you have to keep that in mind. That's one of those subjective things where it's like, okay, eventually this is going to want to retest the 20 as it did so in 2016 and 2017. And we really haven't done that in several weeks. This could be one of the longest periods ever where we haven't touched the 200 or the 20-week SMA. So that's a big concern if you're bullish. The other thing I look at is the RSI on the weekly, because historically, if we're above 50, we're fine. It might look, the chart might look like trash, right? It might look like it's going to fall out of the bottom. But in 2016, 2017, again, we stayed above the 50. In 2018, 2019, we stayed below the 50 until 50 on the RSI, until we found some strength. Now there's some concern. I saw some rebalancing of some other funds that used RSI solely, and they were rebalancing into USDC here because it's breaking down from the 75 level. That's another way to trade the RSI, but historically that's been noisy. And ultimately for me, the 50 has been where it's at as far as the weather vane for what's going on. So if we're above, we're bullish. If we're below, we're bearish. That's not like a big brain thought. That's just how it's looked on backtesting, right? And for me, MACD on the weekly is almost too slow and noisy. If you look at this with a fine-tooth comb, it actually looks pretty good in backtesting. I just don't really pay too much attention to it on the weekly. Now, if this flips red after being green for 2 years, right, or whatever, a year and a half, then it's worth paying attention to. Ideally, what happens here is MACD flips red, we get a cross as we're tapping this 20-week SMA at whatever price level that is. Then all the stars have aligned. We're good to go. We put in some low on the RSI that's near 50. This is if we have bearish continuation here. But overall, trend looks okay, right? We're above the 20, or we're above the 50 on RSI. So how I would record that is, okay, that's 20%. At bare minimum, we're definitely bullish, right? So 20% allocation for BTC there. The 1050 MAs on the daily on backtesting have had an extremely high hit rate. I mean, look at where it gets you in here just on this trend. So it looks like we are crossing that level fairly soon here. We're currently at the 50. So it's a pretty important level for this specific indicator. And MACD has been red for several days. So MACD was giving you a heads up a few days ago, which is why going into the 23rd, I'm looking at MACD thinking, I shouldn't be perhaps as allocated as I was at BTC, because I was suspecting some sort of down move here. So that's part of the subjectivity. Do I rebalance weekly? Do I rebalance every time I see anything? That's up to you to decide, obviously, but this is just where my mind's at when I see this stuff. And if you line this up with the highs and the lows, it has a pretty good hit rate on the daily MACD as far as entries and exits. So to be fully confident in a long here, I want this to flip bearish at this point. Looks like it's going to. I have no doubt it will. And going forward, I want it to flip bullish again. It might flip bearish and stay sideways for 2 months and then go again, But that's a better signal to trade than, do I buy this? It looks like it might bounce, For this specific fund, again, I'm not talking about leverage. I'm not talking about low time frames. I'm talking about this is like a freight train that's heavy and it takes a while to get started and it takes a while to slow it down. And once you're in motion, it kind of is what it is. That's my view on it, right? RSI has been snaking in and above the 50. But again, on the daily, to me, the RSI is less important for this specific case. So, this would get a zero or a -2 on my spreadsheet here. So, that would cancel each other out with the weekly stuff. Cloud again, the 2060 TK lines here are much like the 1050 and kind of different. And overall, the cloud, obviously for me, is just like the holy grail of indicators. It's the number one thing I want to look at most of the time. Obviously, got you in down here perfectly at the bottom here. So currently I'm seeing a couple things. I'm seeing this TKC clamp, okay. I'm seeing this potential edge-to-edge move. I'm seeing a possible support at 45 and or all of the cloud up here. If it doesn't hold, I'm seeing a drop to 38, 39. I mean, nobody's talking about this stuff right now, right? But this is what the cloud is telling me. How I would record this on the spreadsheet, I would just give it a 1 because it's above the cloud. Well, technically it gets a 2, but because it's above the cloud, it's got a bullish TK cross. Okay, so this is technically fully bullish based on this. Then the subjectivity kicks in. It's like, okay, everything else is selling off, blah, 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 blah. I can go down the list. Something that isn't on the spreadsheet, but I also look at this alligator fractal setup, which is, again, trend following, trend measuring, telling you how strong is everything. It gives you these levels that are buy and sell levels. A few days ago, I said 60. If it breaks 60, it's a buy. If it breaks 53, it's a stop loss at that point if you're long. And this specifically was what I was looking at when I was like, okay, we're in trouble here. On this day, whatever the 23rd was, we were not looking so hot on the fractal stop losses. So that is an important level to watch for anything perpetually on the daily. These levels don't print very often, but when they do, they have a super high hit rate, as far as continuation versus reversal. And I mean, just you can look at this too, right? Now, if you know this is a triangle and we break up or down and we make a decision from there, that's a different story. But on the way up, we print a trailing stop loss basically. And it says go long if we break this level, go long if we break this level, go long if we break this level. And we never broke those levels. And this was a trailing stop loss. So you're out right there. Very similar thing here. We were printing these fractals, but we're not breaking above them. So, you know, I wasn't about to allocate anything more into the fund until we did. Because when I'm expecting volatility, but don't have a clear signal one way or the other, I'm leaning on stuff like the fractals very heavily for the decision-making process. So really it's the cloud and the fractals that are the two most technically important things that I'm looking at. So to line those up again for BTC, you know, I was looking at 60, I was looking at 53. 53 was also the Tenkin roughly. If we break the blue line, we usually tap the red line, the Kijun. So I just wasn't confident on the long side of that. Now, I wasn't super confident that we were going to go mega short, right? I have the opportunity to do that on this Enzyme platform through synths, inverse longs, basically. But that wasn't something I was confident in pulling the trigger on yet because the 1050 was still bullish, right? You know, if this crosses bearish, then I can add some confidence as far as pulling the trigger on some shorts here. And ultimately what I'd be looking at is a tap of the 20 SMA. You know, all this stuff feeds on itself as far as support and targets are concerned. And this is part of when people probably get the analysis paralysis of, you know, this says go long, this says go short, this says buy here, sell here. Then that's trading, right? And here's that edge to edge move that I'm looking through April. You know, Q2 seasonality is great, April seasonality is great. So this is unlikely based on that it'll happen, but you can't just stick your head in the sand and say that's not a possibility because this is a thick enough cloud where that's a really good trade if you're short, right? You know, and that's again a short trade I will be taking on the fund if we break the cloud, if the 1050 is bearish, if MACD is bearish. You know, these are all the things that I'm using to make those decisions. And then I look at yearly pivots and I say, oh, there's some confluence there, you know. Typically how this works is it's a ladder. If we climb the ladder up, we just keep going. This was a bear div up here into the R3 yearly pivot. There's big support here now at this yearly pivot. And if we break that, we're going to go to 37, 38, 39 based on the yearly pivots. So all of this stuff is aligning for a very good short setup. And now you could say, well, why don't you just short the top, right? There was a bear div at the yearly pivot. You certainly can, but the trend is your friend until the end, and expectation is continuation, bullish continuation. You know, we bounced on the Kijuns here. We very well could just bounce here, but it's unlikely we'll just free float between this. I'll talk about ETH in a minute, but ETH's got a bearish TK cross, which is even more evidence, along with the 1050 cross, that ETH was looking rather bearish as well. So onto some on-chain stuff. I'm looking at transaction counts for BTC, which probably are admittedly less important than active addresses. For BTC, active addresses I think are more important when I'm looking at like analysis of stuff. And I look week to week. So where are we this week? Where were we last week? Is there an upward trend? Are we ranging on active addresses? Are we at all-time highs? This was the previous all-time high, and we're basically just sitting at the previous all-time high, which is crazy when you think about it. You know, the new normal is the previous all-time high. So active addresses look healthy. They're rising. They're sitting at highs. So a bit of a divergence here as far as price versus what's actually happening on chain. On chain looks okay. You know, price is one thing, but the reality is if there's activity on chain, generally that's bullish. Volumes are bullish if they're on chain. And transaction counts, like I said, those have really been ranging kind of since 2019. And for BTC specifically with batching and SegWit and other stuff going on, it's probably unlikely we're going to see transactions per day just continue to make highs week after week. We just have better transaction efficiency now for the chain. So I think transaction counts are a little less relevant. I mentioned the hodl wave stuff. I mentioned it a lot because I think it's so valuable and useful, but this is very much a binary thing. You know, are we at previous all-time high levels of on-chain activity? No? Okay. And there's room for up. You know, I don't view this as a bullish or bearish metric. I just view it as a binary. You know, do we have room for up? Yes. Okay. I'm not concerned. You know, it's really that simple. I don't like to analyze that any further, but that again goes into the discussion with all the other analysis. If this was at 50% or higher, 6-month coin movements, 50% of the total chain or higher, then I would say to myself, okay, we're moving all this into USD. We're going to open up a short. I'm pretty confident in that because historically the back testing lines up extremely well. This picture tells me not to be super bearish here because the actual top probably isn't in for quite some time, and we're probably good to go. The same thing with the 2-year MA multiplier. Again, not necessarily a specific part of that spreadsheet, but I'm looking, at this point in time, how far are we above or below the moving average multiplier? Historically, if once we break above it, we have 3 or 4 good weeks of euphoria, FOMO, and we didn't break it yet. So we're probably not in the end final stages of the bull market. We look good there. Pi cycle top. This has sniped the top the past 3 all-time highs, and we were getting close again, not quite there. So sigh of relief as far as bubble top concerns. Puel multiple, another thing that I just look at. Binary, oversold, overbought, not quite there yet, getting there. MVRV, same story, oversold, overbought. Are we there yet? Not quite. So these are the things that I'm looking at for BTC specifically when I'm making decisions on trading here. So if all of this stuff looked overbought, then you could say, okay, I have super high confidence that we are ready for some doom. The bull trend's over. It's a bubble, tulips, whatever. Pick your narrative. But that's what goes through my head for the BTC trading side of things. So what am I looking for right this moment is at the end of today, how do we look? Obviously, CME and Deribit and options and futures rollovers this week. And that's playing a big role here as well. But the TA helped me, save some of that capital through stop loss preservation. It's like driving a car. Do I want to put on the gas pedal? Do I want to put on cruise control? Is it a highway? Am I driving through a city? Am I in a parking lot? Very much that type of decision-making process. I'll switch gears to ETH. I'll go through it a little quicker, but again, this backtesting for the 20 SMA has been on the money, right? Every time. There was some little noise in March, but if anything, this suggests that we were ready to blast off before Corona happened, and Corona only delayed the inevitable, because this has been really on the money as far as bullish, bearish, noisy here, and then bullish. So that's been really excellent. Again, the RSI, weekly RSI above or below 50 has been dead on the money for trend. And weekly MACD, a little more concerning for ETH that this is flipping red here. And I think ETH structurally is a little more concerning because of that M double top component, which I'll talk about. I didn't talk about this with BTC, but if there's ever chart patterns that help the decision-making process from week to week, those are certainly something that I'll check out. But right now, the 20-week SMA is basically the previous all-time high. For ETH, if we look at the 1050 cross, again, it looks like we're going to cross on the daily. MACD's been bearish for several days now. And this has been semi-noisy on the daily, but I think the signals are still sound if you line this up with price as far as getting in and out at a certain time or a certain day. So we are still red here. We're going to cross bearish here, most likely. So that's going to cancel out any weekly strength we have on the spreadsheet. I look at it, keep track of. ETH USD, again, ready for a bearish TK recross. It has been bullish since late October, early November. Massive edge-to-edge setup. So again, it's all the same stuff. For ETH here, if we break 16, we're likely heading to 13. And there's a pretty decent shot that that's what's going to happen. So there will be a short entry there, based on the 1050 cross, based on the edge-to-edge. And there's that edge-to-edge I'm talking about specifically. We could languish at 16, 17 for a couple of weeks and then pull the trigger on that, but that's definitely what I'll be watching very closely. Here are those fractals, which on the daily ETH chart have been amazing because we had 3 fractals at the exact same level, basically. Let's say you know nothing of chart patterns. If you're just looking at these fractals, you have a level here, and then you have a level a little higher. When I talk about these levels, I mean the daily close and the wick. The level of the wick is specifically what you're looking at. So this broke down on the 23rd or day before the 22nd, whatever it was. And that's when I was like, okay, this is done. I had zero confidence that this was going to hit continuation at that point in time because we didn't break 1870. That was canceling this head and shoulders, which is what I've been watching on lower time frames. But ultimately, it was the daily signals that I was the most concerned with, and the fractal stop loss there, the trailing stop loss. Here's the alligator fractal stuff, which is now fully bearish on EMAs or MAs, and you get a short entry on the fractals. So ETH looks much more bearish than BTC does at this point in time. And you can see how noisy this looked in September, October, November, as far as the alligators crisscrossing one another. That's less important to me than just the first signal. It's like MACD, it can be noisy intra-week, but if it's bullish for 3 months and then goes bearish, that's a big deal. So until this flips bullish again, I am not too bullish on ETH. It's got this M double top component that if it completes, it looks like it could be headed sub 1K. That's the reality. Again, not many people are talking about that, but if we complete this M, the measured move is 950 to 1,000, basically. And that wouldn't make sense with seasonality. That wouldn't make sense with proof of stake. I get it, right? I get all of the external stuff that's going on. People buying BTC and ETH for corporate treasuries. I get it, right? Like, I hear you in the comments already. I don't care. If this M completes, I'm going to trade it like that, right? Because I trust the technicals more than anything, especially the trend following technicals. And this was the 4-hour. You can see the head and shoulders a little better on that time frame, but very clearly, structurally, a head and shoulders type bearish reversal, and we're pretty much inside of that expected measured move at this point in time. So again, adding to the confidence to jump out of ETH there. ETH is a little weird on the on-chain stuff because there's a massive divergence with price, transaction counts hitting all-time highs, active addresses effectively sitting at all-time highs as well. So this gives me confidence for the bullish side of ETH going forward. Now, if both of these start curling down, then I think we're in trouble. But if ETH can keep its fees under control, this should keep increasing, both of these, which would be mega bullish for price. Something else that really nobody talks about is the unique ETH addresses chart. Not something it's not on the spreadsheet specifically, but it's something I like watching. And we're still increasing at a rapid pace, getting basically 130, 140,000 addresses a day. We're up to 145 million unique addresses. Now, you can't delete addresses, obviously, but it's a good metric for what's the growth here, what's demand, on-chain demand, that sort of thing. And the curve is steepening. It's rising at a faster rate of change here. Classic S-curve of adoption, as the kids like to say. But this looks really bullish to me. So again, it gives me pause to be mega bearish on ETH. Something else I like looking at is ETH locked in DeFi. Not USD value, not on DeFi Pulse, on DeBank specifically, because they do a good job of not double counting some stuff. They give you a duplicate ratio here of 27%. So this again looks bullish to me because there's more and more ETH getting soaked, more and more supply that's getting locked into DeFi. So that's good. That's bullish. Bit of a price divergence there. Nearly at all-time highs for ETH locked in DeFi, which is really saying something. So all that looks really bullish for ETH. It's hard to deny the on-chain stuff. It's hard to deny the narrative upcoming for proof of stake. So that's part of the subjectivity. I have the technicals that say we could be setting up for some mega bearish stuff here, but the fundamentals look real good. And then lastly, briefly, ETH BTC. I don't know how anybody trades this, honestly. You can't trade this directly. So because I can trade ETH and BTC with this, this is part of the decision-making process on top of all the other stuff I talked about. It's where do I see strength? Is it in ETH? Is it in BTC? Because, you can, if you're long ETH, you're basically short BTC because you're not in the other coin, even though they're pretty highly correlated. This is just to illustrate the backtesting with all the stuff I just talked about on the USD pairs makes really no sense on the ETH BTC pairs. This is the 20-week SMA, and the signals are all over the place, right? It's sort of there if you squint. It's kind of loose, but the signals are quite awful. as is the RSI. It's all over the place, above or below the 50. It's super loose. Here's the 1050 on the daily. Again, look at all these crosses over and over and over and over again. Super, super noisy. The cloud, extremely noisy on the daily. So ultimately, I like stupid high timeframes on ETH-BTC just to get rid of all the noise. Here's the weekly cloud. So we're still in the ETH-BTC weekly cloud and going into maybe Q3, Q4, which doesn't make sense for seasonality, but that's what the cloud is telling me. If we can get above the cloud here, then I'm much more confident in ETH strength over BTC strength. And I'd be looking at 05, 07, 08, any flat level on the cloud here as far as targets on the upside are concerned. And ultimately, everyone's looking at 0.1. That's going to be a magnet. If we're at 0.7, people are going to be looking at 0.1 for a target there. And right now, as it sits in the cloud, this could have triggered some sort of edge-to-edge move, right? Like in a vacuum, that's what I'd be talking about. But it's ETH-BTC, so I have little confidence that any of these signals are normal compared to the USD pairs. Ultimately, I'm looking for a trend shift. You can see it was bearish. In the cloud goes neutral, and then above the cloud goes bullish. So that's the potential post-June 2021, what I'd be watching for, what I will be watching for. At that point, the decision-making process gets a little more murky as far as, am I bullish BTC over ETH? How do I want to allocate at that point in time? But that's all part of the fun. And looking at the 1050 on the weekly actually looks pretty good. There's very few signals. What I want to do for any indicator, I want to find a trend signal that has very few signals, that has a high hit rate, that doesn't happen often. And the weekly 1050 looks pretty good. It got a little noisy up here, but overall, it's captured that bear trend and thus far captured the bull trend sort of nicely. It gives you a heads up at least. So this looks like it may cross bearish in the next few weeks too. Like I said, I don't trade this directly. I don't know who people who do. If they do, I don't know how they make money. It's a giant mess. So hopefully if you had questions on how I do what I do on this portfolio, or how I did what I did on the token set stuff previously, this is the stuff that I look at on a day-to-day basis, a week-to-week basis, and the part of the decision-making process that goes into this. So it's focused on technicals, really, some focused on some on-chain stuff, assigning values, helping yourself out a little bit. This helps eliminate the subjectivity, and then the rest of it is obviously, if you have a gut feeling, then you got to go with it if you're successful at that, right? So that's all I have for this one. Bit of a long one. Let me know what you think about all this in the comments below, and happy trading.